While the coronavirus pandemic has left a devastating effect on the global economy, the good part of it is that it has given birth to a new set of stocks. Many of these stocks have continued to surge even as pharmaceutical companies increase their search for COVID-19 vaccine. The search for COVID-19 vaccine has increased investors' interest in the stocks that represent the companies making novel medicines and treatments, which is why learning how to invest in these stocks is now hugely important. But are these stocks a goldmine for the average investor? And should you consider investing in them? In this episode, you will learn what COVID-19 stocks are and why you should invest in them. Benefits and disadvantages of investing in COVID-19 stocks, and much more. What are COVID-19 stocks? COVID-19 stocks represent stocks of the companies at the forefront of the battle against the pandemic. These companies are focused on the development of new medicines, vaccines, or medical devices through the use of innovative technologies and advanced medical science. Examples of COVID-19 stocks include big pharmaceutical companies like Johnson & Johnson, Gilead Sciences, and Merck, along with a host of yet unknown companies with products in early stage development. These companies offer a wide range of products or services, including vaccines. Some renowned biotech companies like Gilead Sciences and Johnson & Johnson are working around the clock to produce vaccines that would curtail the spread of COVID-19. The vaccines are already at the clinical trial stage, thus signaling the fact that a vaccine may become available in 2021. Treatment. There are also companies working to assist patients who have COVID-19 symptoms. Gilead Sciences and other pharma companies are doing well in this regard. The introduction of remdesivir drug by Gilead Sciences has helped patients to recover faster. Personal protection equipment. Let's face it, without personal protective equipment like a face mask or face shield, you can't visit public places like a grocery store or a religious worship center. There are several publicly traded companies working assiduously to provide face masks, face shields, surgical gowns, and other personal protective equipment to reduce the chances of COVID-19 infection. Infection detection equipment and services. You would have observed that temperatures are being checked before people are allowed into public places. Publicly traded companies working to develop temperature testers, thermometers, and thermal imaging are also contributing their quota to the fight against the pandemic. As such, they're included in the COVID-19 stocks category. Cleaning and hygiene supplies. Practices like regular hand washing and cleaning of metallic surfaces have led to massive buying of personal hygiene products and cleaning supplies. Publicly traded companies manufacturing these products also fall into the category of COVID-19 companies. E-commerce and work from home tech. The lockdown order by the government has forced people to work from home, thus opening doors of opportunities to companies making work from home and shop from home activities possible. Examples of companies in this category include Amazon, Zoom, and Slack Technologies, among others. COVID-19 stock pros and cons. Investing in the COVID-19 space comes with lots of potential benefits, some of which are: 1. The potential for dramatic gains. Investing in COVID-19 stocks can prove to be overwhelmingly lucrative, as there is lots of money flying around in the COVID-19 space. For most publicly traded companies providing treatment or manufacturing personal hygiene products, once regulatory authorities approve a vaccine, the stocks of these companies will surge. For this reason, investing before approval is highly lucrative. If there's ever a sector that creates millionaires this period, COVID-19 companies is it. 2. Investing in what you know. For many otherwise intelligent, confident people, the idea of risking hard-earned cash in a stock they don't truly understand just doesn't make sense. You've probably heard of the legendary investor Warren Buffett, who is currently the third richest man in the world according to Forbes. What sets Buffett apart is how many people turn to him for investing advice. And one of his personal investing rules, right after never lose money, is if you don't understand a business, don't buy it. The flip side, if you understand a business or a sector, you could have the upper hand when it comes to buying its stock. Except you live under a rock, there are chances that you have heard of COVID-19 and how it has paralyzed the global economy. 3. the feel-good effect. These days, investors make investments for more than profit. In fact, there's a trend of socially responsible investing sweeping the globe. With socially responsible investing, you look for investing companies that are making positive change in the world. Some socially responsible investors look towards solar stocks for environmental change or financial literacy stocks designed to remove the wealth divide. Others invest in biotech stocks, helping to fund the development of life-saving and life-changing treatment options. You can be part of those investing to curtail the spread of the pandemic by investing in COVID-19 stocks. That's something to feel good about. 4. COVID-19 is likely here for the long term. As the greatest scientists on Earth continue to find vaccines and treatments for COVID-19, in the future, the virus may not be scary as it is now. But one thing is sure, COVID-19 is likely to be a long-term reality. Because of this, investing in COVID-19 stocks offer potentially lucrative long-term benefits. Are there any disadvantages of investing in COVID-19 stocks? As with other investments, there are drawbacks of investing in COVID-19 stocks. Let's take a look at some of them. 1. Fraud is rampant. While there are genuine publicly traded companies contributing their quota to the fight against COVID-19, there are also plenty of companies out there strategizing on how to deceive investors. These companies say that they want to perform research, but need to raise capital to do so. That capital goes to paying executive salaries and perks, and the research never happens. This is a common scam in the COVID-19, and investors should be highly diligent in looking for it in these companies. 2. Many COVID-19 stocks are highly overvalued. Investors are excited knowing that once regulatory authorities approve a vaccine for COVID-19, the stocks of that company responsible for the vaccine will skyrocket, thus generating billions of dollars in revenue. However, this excitement would soon lead to stock overvaluation. Regardless of the quality and of a stock, once it's overvalued, you begin to lose money. Therefore, use valuation ratios to make investment decisions and only invest in undervalued stocks. 3. Additional research is required to make profitable decisions. Investing in any sector that fraud is rampant means there's more research work for you to do. Do not take the words of the management team hook, line and sinker. Do thorough research from multiple sources before investing a dime in any company. There are other drawbacks of investing in COVID-19 stocks. Do you want to know them? Then hit the subscribe button and turn on the notification for our latest update. There are considerable risks in the COVID-19 space. The risks involved in COVID-19 stocks are very high, and here is why. With rampant fraud in the COVID-19 space, there is a lot of misleading statements by those who claim to know so much about the virus. As such, it becomes difficult for investors to know what information is correct and what is not correct. Because of this, investing in a lesser-known company participating in the fight against the pandemic is risky. Even some of the most reputable companies in the COVID-19 space have grown to a level where it would reach a bubble, and investing in a bubble is not a good idea. How much should you invest in COVID-19 stocks? The best way to invest in COVID-19 stocks is to follow the 5% rule. Do not invest more than 5% of your total portfolio value in a single COVID-19 stock. For example, if you have $10,000 to invest, your best bet will be to invest $500. This way, you won't lose much money if things don't work out the way you plan it. That's it for this episode. If you found the information here useful, hit that like button. And if you want to support us even more, buy us a coffee from the link in the description. If you'd like to see more episodes on financial advice, hit that subscribe button and turn on the notifications for our latest updates. Good luck and see you in the next episode.